Now let's look at using accounting methods in tax audit, and this is where people lack the skill. So if you learn this thing alone, you can solve almost all the past questions that have come here, and I'll come and show you, and you see how tax audit is very fun. Now we are going to learn some accounting
Please take your
techniques.
time small, eh?
There are going to be certain techniques that you need, like using control account, using bank reconciliations, and incomplete record accounting. But because the time is short, I mean like 4 months for you to write, most people hardly teach these things, okay? But they come, and when they come, they are 20 marks. Sometimes calculation can be 40 marks. Can you imagine? And there's a trend. If there's no calculation in tax audit, or the calculations are not many like the previous slide, the next slide the calculations may be many. So for me, I don't take chances for my students. So once you are ready, we go. So look, why do we use accounting? Sometimes we need to determine some missing figures, right? And that's where we use these accounting techniques. Now, the most important technique I would need you to have is one, the markup and margin thing we looked at. I'll look at it again. Okay, so understanding the markup and margins very well, and also learning how to use control what? Accounts. Now, if you know control account, you can solve literally every question VAT too, because control accounts are just total accounts, right? Now, what are control accounts? Control accounts are just total accounts of what? Your receivables or your payables. So in our normal accounting cycle, remember, auditing is still accounting in reverse. What did I say? What did I say? Auditing is still accounting in what? Reverse. So for instance, if I have a source document, okay, so let's say that this was an invoice I sold on credit, all right, from maybe Miss Lulu, okay. So if this source document or this invoice came from Miss Lulu, it must enter into what we call the sales day book. Do you understand? Please, are you following? The sales day book or the sales journal, depending on how brofilized you are. Okay, so now this sales day book records only credit sales. Do you get it? Are we okay? Now, this credit sales will now go into the individual customer account. Are you following? To now go into the individual customer account. Now, this individual customer account is Mrs. Lulu, for instance, right? Okay, if Mr. Charles also buys on credit, it will go to Mr. Charles' account. But these individual customer accounts are not the total receivables account. Do you get the idea? So at the end of the day, we are supposed to reconcile all this with the total receivables or the total debtors account. And the total debtors account is what we call the control account. Does it make sense? Does it make sense?
Yes.
So when somebody buys on credit, it goes to what? The day book. The day book goes to their individual personal account. We call them subsidiary ledgers before they end up in the total debtors account. Okay. Now, what happens is that so far as there's a sale, that sale should have also shown in the total debtors account. Meboa. So this is how we used to get missing figures, especially when you are doing tax audit. Okay, so I'm going to show you a past question where this technique becomes very, very important. So let's see a question like that for you. So even look at this question, August 2023, question 4A. So look at the question. What does it say? It says what? Outline the steps involved in audit of incomplete records during an audit assignment. This one just came for 6 marks. And look at the question that came. August 2023, question 4B. Look at this question very well. You have been assigned to the audit of the returns and records of Mina Planche Ventures, a firm dealing in secretarial services, export of non-traditional crops, and a general merchant. During the entrance conference with the owner, she explained that she could not afford the services of an accountant because the salaries and other conditions of service being requested far exceed her income. She therefore records all her transactions in a small notebook, which she keeps. This has been made available to you. In the pocket notebook, you have been able to extract the following, meaning that this one, does it necessitate the use of an indirect method? Does it necessitate the use of an indirect method? I'm asking the class. Oh. Hey, and I'm in Pong.
Yes, it does.
Why?
Because there's margin in the notes.
Not necessarily margin. I read something. That is what you are supposed to use. These are the conditions. The examiner can ask you. I said during the entrance conference, she explained that she could not afford the services of an accountant. One, because the salaries and other conditions being requested far exceed the income. And she records of all her transactions in a small notebook. Small notebook. That alone tells you that what?
Improper record.
Yeah, incomplete records. So it means that we have to use indirect methods. I want you to apply the principle. It's not about the question. I have taught you the principle. It's a principle you use to answer the question. Do you understand? Are we getting there? Don't
Yes,
worry, I'll
sir.
teach you everything you need to know. Now, she therefore records all her transactions in small notebook which she keeps, and she has made it available to you. In the pocket notebook, you have been able to extract the following. So she has stock in trade, right? Which year are we standing in? We are standing in 2022, but the stock in trade as at 2021 end was 70,000, and 2022 was 40,000. And then she introduced capital in 2021. 150,000. Why are they giving us this? It means that this capital she introduced means she started business in 2021. Can you see that? If you introduce capital in 2021, is that not when you started business?
Yes, please.
Good. She has debtors balance. Are you getting? And then what? Creditors balance 2022. Further interview revealed that on average, her goods and other items are sold with a margin of 20%. Goods are sold for cash and on credit. Are you getting it? Credit customers are mostly government workers and they pay by checks. See, this is tax audit too. I didn't create this question. It's a past question. August 2023 question 4B. Can you see that? You can see.
Yes, sir.
Okay. So they said that she sells goods on credit to government workers and they pay by check, meaning that where can we find the figures? From bank statements, because they pay by check. So for control purpose, she pays all her suppliers through bank. Where you are? All cash takings are banked on weekly basis after paying for her two-store attendants of weekly salary of 300 each. Her personal expenses average 150 per month. This is taken before banking. Miscellaneous expenses such as fuel for her car, child school fees, and others amount to 500 per month are also paid in cash. Other expenses excluded from the above average 1,500. Are you getting? That's why we are using the word average, because we don't really know circumstantial evidence. Do you understand? So learn to use the other terms. That one too is there. Then this is what they said. Oh, where's the So they are saying, hey, please, who is that? I beg you. When you join, just mute. There are people on the call. Hey. All right. So they are saying that other expenses are 1,005. Analysis of a bank passbook for 13 weeks. You see, 13 weeks and the 31st March 2022 disclose the following. Are you getting it? So payment to creditors 350, rent paid up to September 2022 36,000, deposit into the bank 500,000. The deposit include 120,000 checks received from debtors. Mina Planch has filed and paid VAT flat rate on what monthly basis up to what 30th June 2022. Determine the total taxable amount that taxable output that Mina Planch made during 2022 year of assessment. State clearly assumptions you consider necessary. Calculate the amount of VAT payable and the net amount to be paid. Determine the profit or loss of the business during the year based on your assumptions in the above. So how many marks? 14. Can you see that? And the 6 marks came from the procedure forward indirect method or the incomplete records, making 20 just from indirect method. 20 marks into where anka wunni anka we diegu. Anka we chia tete. Yeah, so, are we ready? Are we ready? Okay, so
Yes,
now
sir.
let's come home. OTA. So let me show you how a control account works. It doesn't matter whether you are dealing with suppliers or you are dealing with what customers. Now, a control account always starts with the opening balance. How much? Look at this. Say every time there will be the car. If you keep accounts like this, how much the person is owing you? True or false? From the start of the year, maybe. So this might have been 2021 or 2025, right? Then you would have sold more to the person. True or false? So sales, additional sales for the year. True or false? Sir, Obi Doka, if
True.
someone is owing you and you sell more, doesn't it come and add up to what the person was already owing you? It does, right?
Yeah.
So this now becomes the balance outstanding. This is how much the person is what owing you. Do you get it? By the end, if you compare this to the closing balance, the difference becomes how much the person has paid. Do you get it? Those who have done cash flow statement, you have been using this approach. So this one now becomes what? The closing what? Balance. Are we okay? Which tells you how much that the person has paid. So this one becomes what? The cash received from customers. Do you understand? So the cash received from customers. So that becomes the difference. Are you getting it? So now, most of the time, people's sales may not be correct, but this account can help us determine the sales or the purchases. Okay, if this one has to do with supplies, the same thing. You bring your opening balance for the supplies. Are you getting it? Then you bring all the purchases that they made for the year or imports for the year. That will give you what? The total. Do you get it? Then you compare it to the closing balance. The difference becomes what? The amount that was paid to the suppliers, right? Paid to what? Suppliers. Does it make sense? And this one
Yes,
trick
sir.
that can save you. Now that you know this account, right? You can easily get something. So let's take a simple illustration, right? So look at this guy's balance sheet. Okay, so this is balance sheet for 2025 and 2024, right? I'm just showing you something. And then this guy had receivables. Okay, you know what receivable means? Your customer balances. So 2025 his receivables was what? 100,000. 2024 his receivables was what? 200,000. Okay, this is what we have. Then under liabilities we have what? Payables or creditors. So under creditors too, he had what should I even put there? Creditors, let's say he had 20,000 here and he had 80,000 in that here, right? Then inventory. Okay. So let's say that inventory, he had what? 100,000 here. Okay. And then he had what? 25,000 in 2024. Then they told you that total profit declared, right? This guy's total profit declared, I get it. This total profit declared was actually 120 what thousand, 120,000 is to, let's say profit declared was 20,000, right? And then he makes a margin. Okay, let's say this guy makes a margin of 30% on all sales, right? So he makes a margin of 30% on all sales. This is what we have. Do you get it? Then operating expenses amounted to, so I'm just going to give you operating expenses. Let's operating expenses amounted to let's say 25,000, right? With depreciation of 5,000. So this the information we have, right? This is the information we have. We can decide to give you this information. I get, and this information can help you to actually work back everything that is actually missing, to see whether the purchases that they have got is the purchases that we should agree with, or the purchases that we should what get. So this is his bank statement, right? So bank statement. Then we have debit and credit, right? So under debit we have 400,000, and then under credits, we have 555,000. So this is what we have. Then they said all debits relate to transfers to suppliers, right? And credits receipts from customers. So all the credits are receipts from customers, okay? And they are telling us to, one, determine this guy's VAT payable, and then his income tax payable, okay? So the tax he would have paid would have been what? 25%, assuming this was a company, it would have been 25% of this 20,000, which might have been wrong. Okay, we can't trust this. Why can't we trust this? It means that based on circumstantial evidence, we have to work this back up to see whether this guy is doing the right thing. So how then do we do this? We can use the control account by using the receivables to work the actual sale. Do you get it? By using the receivables to work the actual sales and using what? The creditors to work the actual purchases. Are you getting it? So that we can actually get all the missing what? Figures. Do you get the idea? So this margin that you have made, is it at arm's length in the first place? What if this margin is not real? So we can ignore that and use that. Then you state your assumption. Do you get the whole idea? So let's see. Let's first take what? The receivables control account. I said receivables control account is used to determine what? Receivables, does it link to sales or purchases?
Sales.
So this one, we can link it to the receivable schedule by saying that, okay, did we have receivable balances? Did we have customers owing us? Did we have customers owing us? What I have put here, do we have customers owing us based on this? Do we have customers owing us?
Yes.
Yes.
That is the
So at the start
receivable
of the
balance.
year, yes. At the start of the year, they were owing 200, and now they are owing 100 at the end, right? And did we receive any amount from our customers? Go and check the bank statement. Did we receive any money? Yes, we did. 400,000 because 555,000. They said all debits are transferred to suppliers and all credits are received from our customers. No be so. So in that case, the receipt from our customers was 555. So in that case, what's the opening owings? Opening owings, normally you're saying
200.
200,000, right? Then we would have
Yeah.
sold more to them, right? Additional
Yeah.
sales for the year. But this is what we don't know. So this must become like our balancing figure. Do you get it? But we don't know this. But at the end of the day, that should have given us what? Our balance outstanding. But then, did they pay us something? Yes. They paid us something. Receipt from customers. How much did we receive from them?
555.
Yeah, we received 555 from these guys. So at the end of the day, it means that what? The closing balance is how much? That's the closing owings.
100.
That means they were owing us 100,000. Okay. So can we find the missing figure? Yes, we can. So you are saying that somebody was owing you 200, then you sold more to him. At the end of the day, he paid you 555. That means the figure was bigger than 555. Or true or false? And you are left with 100. So something box, let's go to primary school. You are saying that box minus 555 gave you 100. What is box? So it means that you have to add 100 back to get box. Mewa. No be so?
Yes.
So that means box should have been 655 what? 1,000. No be so. Then 200 plus something gave us 655. That is box. What becomes box? That's the balancing figure. Are you getting it? And that is what? 455,000. That means that we've gotten this guy's sales for the year. Do you understand? Or if you don't want to go this way, you can say that, okay, opening owings plus what? Our sales, are you getting it? Minus our receipts should give us what? The closing. True or false? So in that case, we know this is 200,000. Are you getting it? Plus the sales is what we are finding minus what? The receipts of what? 555,000 must give us a closing of 100,000. So what are we finding? We are finding what? S. So I make S stand here, right? Which becomes what? Our 555,000. Oh, why is this thing behaving like this? Oh, coming. So 555,000, right? Minus our 200,000 plus what? 100,000. And that gives us what? That gives us what? As our sales? Is it 455,000? Is it 455,000?
Yes.
Okay. Do you get it? So since you have gotten our sales, can we get our output VAT? So our output VAT is going to give us what? 20%, which is what? 15% VAT, COVID, NHIL 2.5, then get fund 2.5, right? Making this 20 we have here. So 20% times the 455,000 gives us what? As our total
91,000.
91,000. You see how easy this thing is. And I'll teach you many applications, how many different types of questions have ever come since 2006. And that question has come more than 10 times in tax audit. And still, people are still struggling with it. I wonder. Anyway, since we were able to determine the sales this way, we can also determine the purchase the same way. All right. So let's see. Purchases. So purchases, which control account are we going to use? Are we going to use the creditors schedule or we are going to use the debtor schedule?
Creditors.
Creditors. So the same way, do we have their opening owings? We have the
Yes.
creditors balances at the start. Yes,
Mhm.
we do. So creditors are linked to what? Purchases. So we can use it to go and get our actual purchases. Then we have to disregard the purchases this guy made. Do you understand? So creditors, at the start of the year last year, he was owing them 80,000 and now he's owing them 20, right? And he made some
Yeah.
payments of 400,000 during the year. So we can use that to work back, saying that the opening owings was what?
80.
80,000 as at last
80,000.
year. Then out of this 80,000, we should have what? Imported more or we should have bought more, right? So his purchases for the
Yes,
year
purchases.
is what we don't know. But they should have given us an outstanding balance. Mewa. And then during the year, how much was the payment to the suppliers?
400.
Okay, so we would have paid 400,000 to the suppliers, right? Oh, this memory, 400,000. I don't know. I have an AI running on the background completing other tasks. So the AI is taking
Yes.
much of my memory. And I can't put a stop to it.
Sir, which year's question is this?
This one
Yes.
is August 2023 question 4B.
Okay.
But the one we are solving is from my head, though. I'm just teaching you how to use control account.
Okay. Sure.
All right. So payment to suppliers, we paid how much? 400,000 also.
Yes.
Mm.
And at the end of the day, this reduced the account to now become 20,000.
Mm.
So as the closing balance, okay, or the closing owing. So you are saying that you were owing somebody 80, now Odeneka 20. It just a and any of these figures
Yes.
can be the missing figure. You just have to slot the variables in. Now I'm looking for this bad boy. So in that case, something was here, right? Which is box. So box minus 400 should have given us what 20. So that means here should have been 420.
420. Yeah.
Yes.
So 80 plus something should give us 420. What is that thing?
340.
340. So we have gotten this guy's purchases to actually be how much? 340,000. Good. You see, so we'll disregard anything these guys have done and rely on this one. Do you get the whole idea? So in that
Yes.
case, let's see. You can also use the equation. You come and get the same thing, but we don't have time. So now that we've gotten these purchases, can we get his input taxes?
Input.
Yes. So
Yeah.
input taxes is your tax on purchases. So VAT on purchases. So that's 20% by what? The 340,000. And that gives us what?
68,000.
68,000.
68,000. So Vara is taking all of my this thing. 68,000. Okay, good. All right. So now we are not done. No, this is the indirect tax side. But then let's go and get other taxes. First of all, let's get his chargeable income for the year. The profit he has declared, will ignore that profit and deal with the one from our recomputation, right? So chargeable income, we start with sales. Mewa. So sales, we had the sales to be what? 4 sales. 455,000. Mewa.
155, yes.
So 455,000. Then we less what? Then we less cost of what? Cost of
Cost of
sales.
sales.
So cost of sales. Did we have opening
Yes.
stock? Did we have opening
Yes.
inventory?
Yes.
Yes. So on the balance sheet, we have opening inventory. We can go and check and see, yes, where is the balance sheet? Inventory 125, right? So closing inventory is 100, opening inventory is 25.
5.
Is this thing starting to make sense to you? You see, it's the same process.
Yeah.
Yeah. Do you get it? So based on that, we are going to go in there and we are going to apply whatever we have learned. So okay, we have opening inventory to be what? 25,000, right?
25,000.
Then the
Yes, sir.
purchases for the year was how much?
340,000.
340,000. Okay. Then closing stock or closing inventory was how much?
100,000.
100,000. Okay. So if we take this out, that means our cost of sales would have been how much?
265,000.
265,000. No, be so. So that means our gross
Yes.
profit is saying
190,000.
190,000. Okay. Then we less operating expenses. So operating expenses, we had what and what there? So operating expenses, no, they said depreciation was 5,000, but it was 25. Do you remember? So depreciation will not include it because you are doing tax. Do you get it? So in that case, I'll only take the 20,000. So that means the chargeable income should actually become what?
170,000.
170,000. But you see, he declared 20,000. So that guy, Obwa. So in that case, this one will be taxed at what? 25%. Okay. But the purchases are purchases of goods, Mebwa. So we would have withholding tax at 3%. Do you get it? Would have withheld at 3%. The sales too would have withheld at 3%, but that sales will take a credit for it when we compute the tax. So you see how one question alone has so many legs. Semo. Anyway, that's just by the way. So now that you get the idea, can we look at Mina Planche? Can we look at Mina Planche using the same idea? Can we?
Prof,
Yes, sir.
Yes, boss.
please, can you use a T account to determine the purchases and the sales for the
It's
year?
the same
Is it
thing. This
allowed?
is
Yeah.
this is still T account. I prefer this is still
The
T account.
statement version.
I just did a schedule because most people almost sure accounting. So this one is simply this is what you would have done. This is the same as the debtors control. Are you getting it? So you would have done what? Opening balance, right? Your balance brought forward here, which was what? How much was they owing at the start? How much was owing at the
200,000.
start? 200,000.
200,000.
Yes, then the sales for the period, which we don't know, which is the balancing figure, right? But we know that at the end of the year, the closing figure became what? 100,000 also.
100,000. Yes.
Do you get it? And then we know that receipt from customers was how much? The receipts. We receive what? 555 what? Thousand. Or no, so this side will end up being what? 655,000. And that side too will be the same as what? 655 for 1,000. That means the balancing figure is the sales. This is even easier, right? Because what are they now? The difference is the 455,000.
This one looks easier.
Yes, but some people don't like T accounts, so you can still use the T
I
account
prefer
to
the
do it.
Oh, this
initial
is easier. So when you were doing, I was lost. Seriously.
one.
It's the same thing. So
But the
whichever
first
way
one is
you go.
actually cheap. Oh.
Yeah, the first one is simple.
So that's why. So it's a matter of choice. They are open and now I hear. So do you know this one? If you don't know the side of the account, the thing should go. Now it's cheaper.
You are lost. Mm.
Because even though you get the correct answer, if it's at the wrong side, it means the double entry is wrong.
Yeah.
Get it?
Yeah.
So I
So
prefer
it's-
you go with the statement. Now or the
Yeah.
saying. Na he no jeka ho. Na otua saying. Inti aka saying. Do you get it?
Mm.
Then you just put it into an equation, then get the balancing figure. You don't have to work back like I did here. You can just say opening owings plus purchases minus payment is equal to closing. Then you find the missing figure. That's all. Are we okay? So can we do
Yes,
Mina
sir.
Planche? Now, Mina Planche, based on what we are seeing, it means she started business where? She started business when? 2021. Because here
2021
they said she introduced capital in 2021 for
in
one.
2021.
This capital, they are just trying to make students see that there's no need for opening inventory because that was the very first year she started business. Do you get the whole idea? So that means any opening inventory, no, that's 70,000. No, can you see that? Stock in trade. Can you see that?
Yes.
And then 2022 becomes a closing what? Inventory. We can see that, right? Good. All right. So anytime you see opening and closing inventory, the idea is that they want you to get cost of sales or go and get your purchases. All right. So here you can use circumstantial evidence to work one way or the other, and all of them they are going to give you. Now, they said further interview with Mina Planche says that on average, goods and other items are sold with a margin of what?
20%.
20%. Good, good. And credit customers are mostly government workers. They pay by checks. I get it. For control purposes, she pays all her suppliers through the bank. So that means that anything in the bank statement is purely suppliers and customers. So
Yeah.
you can see that deposit into the bank. This would have been amount paid by whom?
Mina Planche.
Yeah, customers. And
By
the deposit
customers.
includes 120,000 checks received from debtors. Oh, you see them? You see them? So that means that if we establish the debtors account, can we do that? So let's find the debtors schedule. So I'll do both for you to satisfy both parties. So now I want to go with the debtors schedule. That okay. As at the start of 2021, did she have any debtors? No, she doesn't have any debtors at the start of 2021. True or false? No debtors.
True.
Why? Because this is the
21,
first year. Yes, this is the first year she has started, meaning that her opening balance would have been what? Would have been nil.
Yeah.
Then she would have sold something to them, right? So sales, which we don't know. Mebwa. That would have given
Yes,
us
please.
our balance what? Outstanding. But at the end of the day, how much was received from the customers themselves? So received from customers. From her passbook. So let's go and check. From her passbook, how much did she receive from her debtors?
500,000.
No. See,
120,000.
this is the total deposit, but not all are from customers.
Oh, okay.
The one that she received is what? The one that came from the customers, the ones the customers paid.
Okay. So
Do you get it?
120.
120,000. So at the end of the day, what is the balance carry forward now? The debtors account in 2022.
85, I think.
84,200, right?
84,200.
Debtors 2022. So 84,200. So can we work back and get the sales? Yes, we can. So in that case, I can say add this back to this. We can get this one, right? Then that's the only one. So that gives us what?
204,200.
204,200. So 0 plus 204,200 is still 204 what? 200. So we've established our sales. Yes?
Simple.
Do you get the whole idea?
Yes.
Okay. This is the one that just came from what? Customers. Do you get it? That means this is only the credit what? Credit sales.
Is that you are close? See.
Do you get the whole idea? That means this is only what? Credit what?
In volume.
That means this is only cash for credit sales, meboa.
Yes.
If we had wanted her total sales, we can put the whole 500,000 here just to get her total sales. Does it make sense?
No.
See, Ade a
How are
woton
you putting the
nyinaa no.
500,000 there?
Mami, let me explain something to you. Listen. Ade a woton ye nyinaa no, you deposited how much into your bank? Is it not 500,000?
500,000.
That means this is the total receipt. She doesn't have any income source apart from her business. Meboa. So if you deposited 500,000, they said 120,000 was checks received from debtors. This man means that this one was from credit what?
Sales.
Credit sales. That means the rest are from what? Cash what?
Sales.
The ones that she actually sold and received cash. Meboa.
Past
Okay.
sales. Yeah.
All right. So that's fine.
I hope it makes sense now.
Yeah.
So now to get her total sales, you are saying that, okay, I know that there were some debtors who owed me previously and I've taken 120. I ain't getting it. So the cash sales remaining is what? How much was her cash sales?
That should be
380,000.
380,000.
Okay, so her cash sales is actually 380, but this 380 is the cash. Now we've gotten her credit sales, Mewa, because this is debtors schedule. Debtors is credit. So this credit, Mewa. So our total sales is what? What plus what?
380
380,000
plus
plus
2.
Yeah, that's
204.
cash plus credit,
200.
Mewa.
Yeah,
Are you guys getting it now?
yeah.
This is proper audit. So in that case, our total sales gives us cash plus what? Credit what? Sales. So cash sales was
Yeah.
380,000. Credit sales now we've gotten it at what? 204, 200. So in
Yeah.
that case, that's what? 308.
584, 200.
Okay, so we have 584,
200.
200. If you put the 500,000 here, you would have gotten the same 584, 200 here as the total sales per con. Does it make sense?
Yeah.
Good. So can we do the same to get purchases? Yes, we can use the creditors balance also to get purchases. Or yes, we can. So creditors, we can do the same thing. So here I'll just pick the account and just say creditors. Balance brought forward 2021. There was nothing there, right? Then we would have bought more from our creditors, purchases, balancing figure. We don't know. By the end of the year, how much was she being owed? Was she owing? What's the creditors balance?
68,500.
Yeah,
68,500.
68,500, right? By the end, we also know that in a bank book, she paid how much? Payment to creditors, she paid how much?
350,000.
50,000. Okay, so
50,000.
when you add this and this, what do you get? So 350,000 plus the 68,500, we end up with 418,500. Remember? 418,500. So 418,500 should be the same thing at both sides. That means the difference is still what? The purchases being 418 what? 500. So we've gotten purchases, we've gotten sales. Remember?
Yeah.
Have we not? Yes, we have.
Yes.
So it's not necessary using this what? On the average, other items are sold with a margin of 20. It's not really important because we've gotten the sales and purchases already. So we don't really need. So all we need to do is get our what? Sales minus cost of sales, then the expenses. So let's start getting her savings, drawings or expenses for the period, right? So what expenses does she have? They said, well, all cash takings are banked on a weekly basis after paying for her 2-store attendant salary of 300. So whatever she puts in the bank is after she pays what? Their weekly salary of what? 300. So that means staff salary. How much is she paying? 300 per week.
Calls me and say I want a recommendation. I
Hey,
don't
how
know
many weeks are in a year?
So what am I going to write? It's going to be generic.
Yeah.
So, staff salary, how many weeks? You see, she only had a passbook for 13 weeks. Do you get it? The bank passbook was only for 13 weeks. That ended on 31st March. But she's an individual. If you are computing her taxes for the whole year, right? Do you get the whole idea? From 2021 to 31st March 2022, we will not go with that. Her basis period should be the whole year. So I would have gone with the 52 weeks. So you suggest you give your assumption at the end of the question, right? So I would have used the 52 weeks in the year. Then her personal expenses average 150 per month. So personal expenses, how much? 150 times what? The 12 months. Then miscellaneous expenses, miscellaneous, that would be 500 per month times what? 12 months paid in cash. Then we have other expenses, right? Then we have other expenses. Also will be what? Other expenses will be how much? 1,500 per month times 12 months, right? And then she paid rent. Do you remember? She paid rent. So rent, 36,000. They already gave it to us. Do you get the whole idea? So these are total expenses. So once you do your sales minus your cost of sales, we can easily do cost of sales because we have what? Opening stock and we have closing stock. Then we less all these expenses, we get her profit. But here it was more about the sales because she was on a flat rate scheme. Now we don't use flat rate. I get it. So this one previously, based on this question, we would have just taken 3% on this 584,200. Okay. And then we'll do COVID of 1% on this 584,200. Do you all remember? But now COVID is no more. Flat rate scheme is no more. So this question would have
Okay,
been
let's assume and use the standard.
Does it meet the threshold in a new act? Or we shouldn't consider that?
It doesn't meet the threshold, yes. But somebody can voluntarily also apply. But this one, it doesn't meet the threshold, do you get it? But assuming she previously met, and then this is the first time she's even operating, so she doesn't meet, so I won't calculate anything. But to do this one, it means I would have multiplied this by 20%, and the purchases too would have multiplied it by what? 20%. Then we subtract the difference. That's all. Okay.
Hello, sir, I have a question.
Please ask your question. I did for you.
So, I'm thinking that since the sales figures were and purchases figures were generated using her passbook that she had for only 13 months, I was thinking maybe it's unfair that we are using her expense that was used for all the 12 months instead of the 13 weeks that we analyze her sales for. So, like, the sales figures we are having is for only that 13 weeks that ended the first March. That's what I'm thinking. So probably maybe we should also do her expenses to match that 13 weeks that she had her passbook so that all will be the same. But
Sure.
yeah, I'm
It can be done. You can just switch everything to 13 weeks. So 13 weeks means how many months? 52 weeks in a year divided by 13. 4 months?
That's almost, yeah.
4 months. Okay, but she started business in 2021, meaning for the whole year. So maybe you can do that portion. Maybe it's the idea I want to sell to you. Is that clear? But I get where you are coming from. I hope it made sense though. Good. So I want to show you one question that has popped up more than 10 times, and it still relies on the details that we have learned. Still are the same details na Isuana na yede Babeye.
Prof.
Yes, please.
The miscellaneous, is it
Here we are not looking at allowable or
allowable?
disallowed. No, they just say compute the profit for the business. But after you compute, if you are finding the tax, you have to add back the personal expense.